Hey, what's up guys? John here. The third largest mortgage originator in America, Mr. Cooper, has 4.3 million customers. Well, they were allegedly hit with a cyber attack on the 31st of October.
The lending service company Mr. Cooper is the latest to fall victim to the ubiquitous cybersecurity hack.
But one day before the cyber attack, the CEO sold $26 million worth of stock. What are the odds? Then 30 days before that, sold another $26 million worth of stock. This same CEO issued a warning in 2020 about what is to come, but then something very interesting happened just a couple, maybe 6 months ago, 5 months ago, where they reached into the accounts and pulled almost $2.5 billion out of customers' bank accounts. All of these things are happening at a very unique and interesting time. We need to connect the dots here and ask ourselves what happens next. In this video, that's what we'll do. Please hit the like button. When you hit the like button, YouTube will share this content to educate other people about what's really happening. And if you'd like to fix your credit to position yourself for what I believe is going to be the greatest wealth transfer of all time, we'd love to help you. At my company, GreatCreditFast.com, that's GreatCreditFast.com. We have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions. Any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. So take a look at this. So Jay Bray, he has more than 25 years of experience in mortgage servicing and originations, right? And so he put this out. This is Mr. Cooper. This came out right here. This is from Security Exchange Commission. Right here, the 30th of October, sold 466,000 shares at $56.34 a share, right? One day before this, cyber attack, they say, right? What are the odds? $26 million worth of stock. Then, 30 days before that date, 9/29, $491,000 or 491,000 shares at $53.87. Roughly another, $26 million worth of stock. So when you add up the two numbers, about 52 million, give or take, worth of shares just before this major event that took place. Then Jay Bray, the CEO of Mr. Cooper, said in reference to the $2.2 trillion stimulus package that happened in 2020 that there is going to be complete chaos. His company apparently had a strong balance sheet, right? But others in the industry would start seeing problems. Instead, interest rates fell, millions of people refinanced their mortgages, and lenders made a lot of money. Well, that story is now over, and now lenders are getting rug pulled due to what's going on in the economy, what's going on with interest rates, and what's going on with these loans that they've issued. So look at what's going on here. November 13th, 2023. This is just an updated list of what's going on with the mortgage market. Associated Bank cut 3%. This is on the 10th. On the 9th, you have more cuts here on the 7th. On the 7th, you just scroll all the way down and you look at all of the layoffs that have been taking place, a lot of consolidations, a lot of mortgage lenders just simply going out of business. And the more you scroll down here, the more you start to see this trend that's been building over 2023 and 2022. And it just continues to go on and on and on. But the complete list of full-fledged closures, it's pretty shocking. It's pretty revealing that we're walking into what I think is going to be a liquidity crisis in America, especially when it comes to home loans, credit cards, personal loans, just getting access to money, small business loans. It's going to get a lot harder as we start to see a lot more consolidation and a lot more fear getting pumped into this market. So Mr. Cooper does not store, listen to this, Mr. Cooper does not store banking information related to mortgage payments on our systems. This information is hosted by a third-party provider, and based on the information we have to date, we do not believe it was affected in this incident, right? That's what they said. But the same exact company says state regulators and state attorney general levy combined fines of $20 million for data misuse impacting 480,000 consumers nationwide. When did this come out? October 17th. So this came out about 12 days after, or 12 days before this big cyber attack. Well, California Department of Financial Protection, right, CFPB, and 43 state agencies have reached settlements with ACI payments for erroneously initiating electronic transactions totaling $2.3 billion from accounts of 480,000 mortgage holders serviced by Mr. Cooper, formerly known as NationStar Mortgage LLC. State regulators levied $10 million in fines through a multi-state enforcement action led by regulators from Arkansas, Connecticut, Maryland, Texas, support the Conference of State Bank Supervisors. Additionally, 50 state attorney generals, including the Attorney General of California, levied $10 million in fines to ACI. I mean, they have these small fines, but they were able to borrow, in the short term, $2.3 billion. So was this a situation in which they needed this money and they needed to pay bills and, they just happened to make a mistake at the perfect time? I'll leave that to you to decide. ACI Payments is a subsidiary of ACI Worldwide, a state regulated money servicing business license in California and nearly all of their states. Mr. Cooper offered ACI SpeedPay product for its customers to schedule their monthly mortgage payments, enabling automatic transfers of authorized mortgage payments from their personal bank account to Mr. Cooper. The violations occurred when ACI Payments erroneously used live customer data in a test of its SpeedPay platform, causing unexpected and sometimes multiple mortgage payments from customers' accounts. So you see that, right? 2.389 billion, right? You start to see this, you're like, okay, well, what else is going on here? They settled this, this recent crisis that happened and still ongoing that started October 31st for 3.6 million. They sold 3.6 million. There's 4.3 million mortgage holders impacted from this. So it's less than $1 per client, right? So you start to look at this, then you start to pay close attention to what's going on with the forbearances. All of this connects perfectly to a lot of these stimulus packages, a lot of these, protections that came into place to help people. They said thousands of veterans face foreclosure, and it's not their fault. This came out 2 days ago. Look at this. Becky Queen remembers opening the letter with the foreclosure notice. My heart dropped, she said, and my hands were shaking. Queen lives on a small farm in rural Oklahoma with her husband Ray and their 2 sons. Ray is a U.S. Army veteran who was wounded in Iraq, and since 1940s, the federal government has helped veterans like him buy homes through the VA Home Loan Program, run by the Department of Veterans Affairs. But now the VA has put this family on the brink of losing their house. I didn't do anything wrong, says Ray Queen. The only thing I did was trust the company that I'm supposed to trust with my mortgage. Like millions of other Americans, the Queens took advantage of what's called the mortgage forbearance, which allowed homeowners to skip mortgage payments. It was set up by Congress after the pandemic hit with people who lost income. But the NPR investigation has found that thousands of veterans who took forbearance are now at risk of losing their homes through no fault of their own. And while the VA is working on a way to fix the problem, for many it could be too late. For the Queens, this all started September 2021 when Becky's mother died. She had to take an extended leave for work and lost her job. So last year, when their savings dwindled, the couple says they called the company that manages their mortgage, Mr. Cooper, and were told that they could skip 6 months of payments, and once they got back on their feet, could start paying again. The couple says that they were told they wouldn't owe missed payments in a big lump sum. I am specifically asked, how does this work? They said, we're taking all your payments, we're bundling them and putting them at the end. That is, the missed payments would have to be moved to the back end of the loan term, so when they could start making their own payments again, but that's not how it worked. In October 2022, the Department of Veteran Affairs ended the so-called Partial Claim Payment Program, or PCP, that enabled homeowners to do that. This happened even though the mortgage industry, housing advocates, and veterans group all warned the VA not to end the program, saying thousands of homeowners needed to catch up on missed payments. Interest rates had risen so much so that they couldn't afford to refinance or get back on track any other way. Ray Queen says nobody told him any of this. How does that happen? This is supposed to be a program that all you have to do is help people in times of crisis so you don't take their house from them. The Queens say they tried to come off their forbearance in February, but this year and resume paying their mortgage. They were both working again, but they ran into delays with the mortgage company. Then in September, the couple says that they were told they needed to come up with more than $22,000, which they don't have, or either sell their home or get foreclosed on. Their mortgage servicing company, Mr. Cooper, said in a statement it explored every possible avenue to work through a solution for the customer, but it said the VA needs better loss mitigation options and referred to NPR to a letter from advocates, industry, and veteran groups urging the VA to restart the PCP program. The VA has really let people down. The Department of Veteran Affairs has really let people down, says Christy Kelly, a consumer lawyer in Virginia, who says she is hearing a lot of other veterans in the same situation as Ray and Becky Queen. The homeowners entered into the forbearance. They were made certain promises and they were certain representations that were made, and the VA essentially pulled the rug out from everyone. Think about what's going to happen here, right? What are the odds all these things are happening at the same time? For some homeowners, ending this program may not mean foreclosure, but it still means financial hardship. Many of these people had 2-3% rate loans. With the PCP program, they could keep that interest rate, but now, she says, the only way they'll be able to save their home is to enter a loan modification where interest rates will be around today's rate of 7.5%. 7.5% is if you have perfect credit. 800 credit score, you're getting 7.5%. If you have average credit score in America, which is 698, probably looking around 8.1%. So for most people, their payments will increase by $600 to $700 per month because the VA has decided to end the partial claim program. Many homeowners can't afford such a huge increase in their monthly payment. According to the data firm ICE Mortgage Technology, 6,000 homeowners with VA loans who had this forbearance are currently in foreclosure process. 6,000 people, and 34,000 more are delinquent. Kelly says most other homeowners in America, with people with FHA loans, for instance, or loans backed by Fannie and Freddie, still have ways to avoid foreclosure by moving missed payments to the back of the loan term. But homeowners with VA loans don't, because VA ended that program, so veterans are being treated worse than most other homeowners. Service members are in a position where they're going to lose their home, she says, and for most people, that's everything they work for, and all their wealth is in their homes. VA has a plan to help people, but it could be too late. Department of Veteran Affairs says it has no choice but to end the program. We had a short-term authority for that specific program during this, says John Bell, Executive Director of Veterans Benefit Administration Loan Guarantee Servicer. It wasn't part of the normal authority. Some in the industry think the VA did, in fact, have the authority to extend the program, but either way, it ended. Now, though, the VA is taking the situation seriously. NPR has learned that the VA is working on a new program to replace the old one. It will work in a different way, but in a similar effect to save people from getting foreclosed on. Bell said it's going to take 4 to 5 months to get it up and running. Well, we'll see. We'll see how that works out, right? To me, it looks like the mortgage market is going through a massive shift. A lot of people are going to lose their homes. A lot of things don't add up. If you start to connect the dots, you'll start to come up with a different perspective, a different opinion. What do you think? I'm curious what you think about this situation. What do you think the odds are that all these things are happening, in perfect patterns? You have the CEO, Mr. Cooper, liquidating right ahead of time, right before the crisis happens. You have all of these situations happening back to back to back to back. Drop below. Let's have a conversation about it. If you want to fix your credit to position yourself for the greatest wealth transfer of all time, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description below this video. Schedule a free strategy session. I'll catch you in the next one.